The second quarter of this year was one straight rally, with the S&P 500 up close to 11% and both developed and emerging markets eclipsing 11%. Bonds plugged along at about 1% for their returns. But all these nice numbers hide a plot twist that is worthy of Harry Potter. See, between February 20th and April 8th, the S&P 500 tumbled almost 19%, just barely short of the 20% needed for an official bear market. The culprit wasn't recession data or an earnings collapse. It was a self-inflicted tariff scare. Once the bond market started to wobble, which is the one thing that terrifies every politician, the White House slammed the door shut and suspended the tariffs, and then the S&P 500 delivered one of the biggest one-day jumps of my whole career. It jumped nearly 8%. This all happened faster than the COVID crash and rebound. If you blinked, you missed it. But if you didn't blink, you probably felt your pulse quicken a little bit. Educator Ben Felix says it clearly. It's never the drop in stock prices alone that makes market crashes scary. It's the narrative that goes along with them. So many of us can say, I have no problem watching my portfolio drop by 20%. However, it's not always the number that scares us. It's the narrative. It's the Boggart. What I mean by that is, in the book Harry Potter and the Prisoner of Azkaban, the defense against the dark arts teacher, Professor Remus Lupin, wheels in an ancient wardrobe in front of the classroom. Inside of it lacks a Boggart, which is a shape-shifting creature that has no true form of its own. But when the wardrobe door opens, the Boggart scans the room and instantly transforms into the greatest fear of the person who is standing closest to it. So for Neville Longbottom, it turns into Professor Snape, or for Pavarti Patil, it shrieks into a 7-foot cobra, or for Ron Weasley, who despises spiders, of course he gets a giant black arachnid clicking its pinchers. The markets work the same way. Eventually your portfolio is going to fall, and maybe not by that much, but it's going to fall for the reason that you fear most. So how do we deal with that? First, you need to name your Boggart. What is the thing that could make you hit the sell button? Is it a war? Another pandemic? Another interest rate hike? Or maybe a politician you hate? The second thing you should think about is, how long will it take for that event to resolve? Is it going to take 4 years, 5, 7? And then let's make sure that you have a big enough war chest of cash and bonds to get you through this. Entrepreneur Derek Sivers was once given the compliment, Derek, what I most admire about you is you can always speak your mind without fear. How is it that you can do that? Derek thought for a moment and then he responded, well, I think it's because I have $500,000 in my checking account. So let's ask ourselves that question. Do you have enough cash? Is your war chest big enough? Do you have too much debt? Or maybe you just need to turn off the financial news. Investor Bruce Berkowitz always says that cash is financial Valium. So with the market recovery, now's a good chance to take stock and think about how you were feeling. Were you scared? Were you nervous? If so, now's a good chance to replenish our supplies and pay off debt and build up that war chest to get ready for whenever your Boggart will come. I can't tell you what mask it will wear, but perhaps it will be the thing you fear most. Morgan Housel always says that every past market decline looks like an opportunity and every future decline looks like a risk. Let's make sure the next decline doesn't look so risky for you and looks like an opportunity. Thanks for being with us, and feel free to reach out if your Boggart ever seems like it's closer than arm's length.